So today, I stumbled across this tiny stock called Critical Metals Corp, ticker CRML. And honestly, the story here is wild, like truly wild. I had to dig into it. First things first, this is a microcap company. We're talking about a market cap around $580 to $790 million, depending on the day. The stock's trading at around $8. So right off the bat, we're not comparing this to Apple or Tesla. This is a growth stage mining company that hasn't even started producing anything yet. Zero revenue, no earnings, but here's the kicker. They might be sitting on one of the most strategic rare earth deposits on the entire planet. Let me paint the picture for you. They own this project called Tanbreez in Greenland. And when I say it's big, I mean really big. We're talking about 4.7 billion tons of mineralized rock. That's billion with a B. Just to put that in perspective, imagine a cube of rock so massive you could see it from space. And inside that rock, rare earth elements. The stuff that goes into electric car motors, wind turbines, fighter jets, smartphones, basically everything modern society runs on. Now here's where it gets interesting. China controls about 60% of global rare earth production and 85% of the processing. So if you're the US or Europe and you want to build your own supply chain for these critical materials, you've got a problem. You're basically dependent on China. And that's a national security issue, right? You see where this is going? So the US government steps in. In June 2025, Critical Metals announced they received a letter of interest from the US Export-Import Bank for $120 million in financing. That's a 15-year loan to help develop this project. The US government doesn't just hand out money like that unless they really want this thing to happen. This is part of their supply chain resiliency initiative to counter China's dominance in critical minerals. But wait, there's more. Just a couple days ago, the company announced they're boosting their ownership stake in Tanbreez from 42% all the way up to 92.5%. They're doing this by issuing shares worth $116 million to the project's founder. And here's the genius part. The founder waived a $10 million investment requirement that was supposed to happen first. So they're basically gaining control of this massive asset without having to spend cash up front. They're using their stock as currency. Now let's talk about what's actually in the ground. The current resource estimate is about 45 million tons grading 0.40% total rare earth oxides. And get this, 27% of that is heavy rare earth elements. That's the really valuable stuff. Things like dysprosium, terbium, yttrium. These are essential for high-performance magnets and electric vehicles and defense applications. Most rare earth deposits are dominated by light rare earths, which are way less valuable. But Tanbreez is heavy rare earth rich. That's a huge deal. Oh, and here's another advantage. The deposit has extremely low levels of uranium and thorium. Why does that matter? Because most rare earth deposits are radioactive nightmares. They're a regulatory and environmental headache. But Tanbreez is clean. That makes it way easier to permit and develop. The company released a preliminary economic assessment in March 2025, and the numbers are absolutely bananas. They're projecting a pre-tax net present value of $3 billion and an internal rate of return of 180%. Let me repeat that, 180% IRR. That's almost unheard of in mining. For context, a good mining project might have an IRR of 20 to 30%. This is 6 times that. Their plan is to start small and scale up. Phase 1 targets 85,000 tons of rare earth oxides per year, potentially starting as early as 2026. Then they can expand modularly up to 425,000 tons per year. That would make them one of the largest rare earth producers outside of China. And they've already got their first customer lined up. A company called Ucore Rare Metals has signed an offtake agreement to process the concentrates at their new facility in Louisiana. So there's already a market for this stuff. Now, let's talk about the drilling results. They've been releasing assay results from both new drilling and historical drill holes, and the grades are consistently high. We're seeing total rare earth oxide grades ranging from 0.33% to 0.51%, with some holes hitting even higher. And the mineralization extends deep, like hundreds of meters deep. Some holes are showing mineralization down to 338 meters. That means this isn't just a surface deposit. There's potential to massively expand the resource with more drilling. The CEO, Tony Sage, has been pretty vocal about their exploration target. They're aiming to potentially double the current resource from 45 million tons to over 100 million tons, with a stretch goal of reaching 500 million tons. That's aggressive, but the drilling results so far support the idea that this thing is huge. They're currently working on a bankable feasibility study, which is about 70% complete as of September 2025. This is the big one, the study that proves to investors and lenders that the project is economically viable. They're on track to complete it by the end of 2025. Now let's talk money, because this is where it gets tricky. The company currently has no revenue. They reported an operating loss of $619,000 in the most recent quarter. They've got some cash, but they're burning through it on exploration and development. So they're going to need more capital to build this thing. That $120 million letter of interest from the U.S. government is a start, but the full capital cost to build the mine could easily be in the hundreds of millions of dollars. Here's the thing, though. They're not alone. The Trump administration has been looking at taking a direct equity stake in the company. There was a Reuters article from October 2025 that said officials have discussed this. That would give the U.S. government a direct interest in the project. And just recently, there are reports that the UK, EU, and Greenland are exploring a critical minerals partnership. So there's major geopolitical interest here. Let's talk about the technical indicators real quick. The stock shows a strong buy signal across multiple time frames. The moving averages are all pointing up. The technical summary shows all oscillators are neutral to bullish and all moving averages are in buy mode. The stock's been on a tear recently, up over 20% in the past year, but it's also volatile. This is a small cap stock, so it can swing wildly. Options data shows there's bullish sentiment. The put-call ratio is low, meaning more people are buying calls than puts. Implied volatility is elevated at 155%, which makes sense for a microcap stock with big news flow. Looking at the seasonality chart, the stock tends to perform well in Q4, which is where we are now, so timing-wise, that's interesting. Now, the risks. Oh boy. There are risks. First, this is a development stage mining project. It could be years before they actually produce anything. Delays happen all the time in mining. Costs can balloon, permits can get held up. Greenland has a history of mining projects that never got built. Second, they need a ton of capital. Even with government support, they're going to need to raise money, which could mean dilution for shareholders. They've already been issuing shares to acquire the increased stake in Tanbreez. Third, rare earth prices are volatile. If prices drop, the whole economics of the project change. China also has a history of flooding the market with cheap rare earths to kill Western competitors. Fourth, there's no dividend. This is purely a speculative growth play. You're betting on the project getting built and the company becoming a major producer. But here's the counterpoint. The strategic value is real. The US and Europe desperately want a domestic rare earth supply chain. This isn't just about economics, it's about national security, and Critical Metals owns one of the few world-class rare earth deposits outside of China. That has value beyond just the numbers. So what's the bottom line? This is a high-risk, high-reward play on the reshoring of critical mineral supply chains. If this project gets built, the upside could be enormous. That $3 billion NPV they're projecting, that's way more than the current market cap. If they execute, there's serious money to be made. But if something goes wrong, if they can't raise the capital, if permits get delayed, if rare earth prices crash, this stock could get hammered. For me, this is the kind of stock you might put a small portion of your portfolio into if you believe in the rare earth thesis and you can stomach the volatility. It's not a sure thing, but the asymmetry is compelling. The potential upside far exceeds the downside if you size your position appropriately. That's my take. Do your own research. This isn't financial advice, but man, this story is fascinating. A tiny company in Greenland might end up playing a major role in the next decade of energy transition and geopolitical competition. Pretty wild stuff. Hope this helps you on your quest for profits. Catch you on the next one.